I think I'm going to get started. So thank you very much for joining us today. Good morning for some people, good afternoon for others, good evening, and a very good, very early morning to the people from the US. We've actually got one of our panelists today joining from the United States. So we're very grateful that she can join at such an early time. I am Francesca O'Hanlon. I'm a postdoctoral researcher at the University of Cambridge. I focus on water innovation and water security, and I work particularly with populations in the Global South. For the last 18 months, I've been acting as strategic and technical advisor to AXA XL's Valuing Water initiative. It's a really exciting initiative that I'm really, really glad to be working on, and it's run by AXA XL's sustainability team. For those of you who don't know, AXA XL is a very well-respected insurance and reinsurance provider. The topic of today's talk is ensuring water security in the Global South, and we're really going to look at the role that insurance can play in improving water security, managing water-related risks for populations in low-income and emerging economies. I think it's a really fascinating topic, and I've had a really exciting week this week at World Water Week, but it's actually a topic that really hasn't been covered yet. So we're really bringing something slightly different today. Let's go to the next slide. So I'll just briefly introduce our panelists. The format of today's talk is going to be a panel discussion. I think this is the way we can share the best amount of information, and it makes it quite interactive, quite exciting way to present. So first, we're going to have Ellen Shattuck, who is AXA XL's Sustainability Officer. She's going to talk to you a little bit about why AXA XL, an insurance organization, are interested in water and why they're actually working very hard to value water better. We'll then pass over to Claudia Taimi, who is Director of Strategic Market Development at AXA XL. And she's going to talk to you a little bit about how insurance can protect populations in the Global South and what the protection gap is. Then Andy McFarlane, who's Head of Climate at AXA XL, is going to go a little bit into the technical detail. I give you an insurer's perspective on climate risk. And I think it will be fascinating for a water audience to understand a little bit of the detail of the insurance mechanisms that are available for populations. And finally, we've got Dr. Helen Greatrex, who is Assistant Professor in Remote Sensing and Geospatial Analysis at Penn State University. She's going to be giving you an overview of some of her work that she's been carrying out in partnership with AXA XL in Somalia. So a little bit of a case study and some findings on her weather work that she's been doing over the last year in Somalia. So just to begin, I'll talk about why we're actually valuing water security. So as a professional, I have always thought the term water security is quite fascinating. Why aren't we just talking about access anymore? Why aren't we talking about supply? Why is the predominant term that we use today to discuss the human relationship with water? Why is the word security in there? And it's really my view. I've spent actually 5 years now talking about this. Let's go to the next slide and researching this. It's really my view that the reason for this is there are so many factors today that put water access at risk, and there are so many water-related risks. Things like the cost of asset management being far beyond the reach of many asset operators in the Global South, meaning that water supply is often interrupted. Things like contamination of water, drought and food insecurity, geopolitical conflict, meaning certain populations don't have access to the water that is actually provided from beneath their earth, and it's going to other populations. But most importantly, and obviously most notably, the risk factors associated with climate change. When we talk about climate change, everything is to do with water, flooding, drought, water scarcity, extreme weather events. All of the risks associated with climate change are really predominantly water-based. And it's for this reason that the water community is so interested and working so hard towards securing water now and in the future, because we know these risks are going to become more prevalent. And with that in mind, I see insurance as one of several tools that can help to mitigate these risks. And it's a tool that's used widely in OECD countries in the Global North, but it's a tool that is underutilized in the Global South. And it's a question that really fascinates me is, why is it underutilized, and how can we get more people protected from water-related risks by having insurance protection? So with that in mind, I'll pass you over to the insurance experts who know a lot about this topic. First, we'll have Ellen Shattuck. She's going to present to you a little bit of the work of AXA XL's Valuing Water initiative. Ellen is Sustainability Officer at AXA XL, working in a small global sustainability team on their strategy, Our Impact, Our Future strategy. Their strategy actually has 3 areas which are relevant to AXA XL's business. So they focus on climate change, access to water, and financial resilience. And it's the access to water piece that I'm supporting Ellen with her work on. And Ellen is project manager for this piece. So I'll hand over to Ellen.
Thanks, Francesca. This is, as you said, AXA XL's first World Water Week, and we're really excited to be here. So I'm just going to spend a few minutes introducing who AXA XL are and why and how we're valuing water. So AXA XL are the global property, casualty and specialty division of AXA, the global insurance company. And in plain English, that means that we provide insurance products to other businesses, from small companies to big global brands that you'll all be aware of. AXA XL's role as an insurer is to provide solutions to our clients' most complex risks. And as such, we believe we're well placed to contribute to a more water secure world. As part of AXA Group, we also want to play a part in AXA's ambition to sustain our climate leadership position. So as Francesca mentioned, you'll hear more about our work from Claudia and Andy shortly, but I wanted to start with some background on the importance of water for us. So as this audience will know, water is the primary medium through which we all feel the effects of climate change. It's an issue that will affect both developed and developing world countries. And we know that water availability is becoming less predictable in many places, and the negative impacts of limited freshwater are numerous. Poor health, interrupted education, gender inequalities, conflict, unreliable food production, many more. So ensuring that everyone has access to water is a critical component of mitigating climate change. So I've just put a couple of stats on the screen about the economic value of water. So the CDP recently estimated that 2/3 of businesses have substantial water-related risks in their direct operations or in their value chain. And we know that all industries rely on water to some degree. In 2020, CDP companies reported maximum financial impacts of water risks at $301 billion US, 5 times higher than the cost of addressing those risks. So we see that in nearly all sectors, the cost of action is less than the cost of inaction. The other point I wanted to highlight here was about the kind of risk landscape. So in the 2021 Global Risks Report published by the World Economic Forum, it highlights that water is inextricably interwoven into 4 of the 5 most significant risks facing the world today, and actually all 5 if the role of water sanitation and hygiene in reducing the spread of COVID-19 is taken into account. Nonetheless, in that 2020 report, water crises no longer appears as a standalone risk. Instead, water crises and food crises have been merged into natural resource crises. So despite being connected to those 5 most significant risks, unlike in previous global risk reports, the word water is no longer present in that global risk landscape. And we feel that that reflects one of the most critical issues associated with the global perception of water today. The importance of water is entirely underestimated and undervalued. So the role for us as an insurer, as I was saying, is to help our clients and communities manage and identify their risks. And we believe that water-related risks are clearly something that the world is underprepared for, and therefore we should be addressing. So this could be through helping corporate water users manage their own risks and seize opportunities related to water, but also promoting long-term water security for all, so to protect against future risks. So just a little bit about what AXA XL are doing in terms of water. So we have created our Valuing Water initiatives, and they aim to highlight the value of water through evidence-based programming with guidance from specialists in the water sector, as well as through client and colleague engagement. We've also done some knowledge sharing and network building between stakeholders too. So it's a really broad approach. And our work so far includes a partnership with WaterAid to deliver a water sanitation and hygiene project in northern India. We've also held discussions with our clients on how they perceive and address water risks in their own businesses. And then we're also supporting academic research on how drought affects different livelihoods in Somalia, which you'll hear more from Helen about shortly. So we're really in the early stages of this valuing water work. There's much more we can and would like to do. And we're really keen to just use today's session to hear from the World Water Week audience about how we can contribute to kind of global water security and resilience efforts. And then just on this session, we wanted to say that, AXA XL works with clients globally, and a key priority for our sustainability efforts is to build resilience in the most vulnerable communities. So that's why we're focusing today on the Global South.
Yeah. Thanks very much, Helen.
No problem.
So before I hand over to our next speaker, I'd just like to make you all aware that there's a few questions and a few polls up on Pathable that we'd love you to answer. I think really exciting for us to understand is who's in the room today. What sector are you from? Is it mainly WASH? Is it policy? So just have a go on the polls. If you have any questions for the speakers, and we'd love it if you do, really, really keen to make this interactive, you can just enter your question for the speaker. So if it's particularly aimed at one speaker, if you put their name first, and I'll pose it to them at the end of each speaker's talk, and we'll have a little Q&A at the end of the session where we can really just discuss how insurance and water can collaborate better. So without further ado, I'd like to introduce our next panelist, who is Claudia Time. She is Director of Strategic Market Development at AXA XL. She promotes and drives the use of disaster risk finance and insurance to increase countries' resilience and protect their development gains. She has a wealth of experience in the insurance industry, over 20 years, if you can believe it. Claudia, take it away.
Thank you, Francesca. And good morning, good afternoon, everyone. Great to be with you. As Francesca said, in my section, I will talk to you about how and why insurance can and should play a role in protecting populations in the Global South, in countries vulnerable to climate risk, and many of which, of course, relate to water security or a lack thereof, and in doing so, help drive resilience. So let's start. Next, please. So the role of insurance, since it was invented in the 17th century, has been to be a societal safety net. And what that really means, next please, is simply to help, whether it's governments, countries, and most importantly, people, get back on their feet after a disaster strikes. Now, how do we know this works? We commissioned about 2 years ago an independent study from the Center for Risk Studies at Cambridge University, which looked at about 100 cases of disasters across the world. And what they found is that in countries that have a high use of insurance, recovery time after a disaster on average is under a year. In countries where insurance is not widely used, recovery can take up to 4 years and more than 4 years. And every 1% increase in insurance use will shorten recovery times by about a year. So why is this? Really, because in using insurance, or countries that use insurance will understand the risk better, and will have access and the information to choose what tools to use, not only insurance, but other climate financing tools. And they will also be more likely to have plans in place about what to do after a disaster strikes. So with a prearranged financing vehicle like insurance, the most important issue, though, is that funding will arrive more quickly. So you will all remember the earthquake that hit Haiti on 19th of August, just very recently. A first payout arrived there within a week. And when the Hurricane Dorian hit the Bahamas in 2019, causing incredible destruction, the first tranche of payout from insurance arrived there within 8 days and the full payout within 2 weeks, enabling a really quick start of reconstruction. And so, on the other hand, if countries need to depend on humanitarian aid, it has been seen that, for example, in the case of drought, it can take 7 to 9 months between the time that a harvest fails until funding for food or cash reaches those that are affected by it. And from donor countries, it has also been seen on average that it takes almost 400 days between that a crisis occurs and the first dollars are released. So timing makes a huge difference. So you would think that on this basis, many developing countries vulnerable to climate risk should have a lot of insurance in place, right? Next, please. Unfortunately, that is not the case, because we have something that we call the protection gap, which is the difference between economic losses and insured losses. So let me walk you through this very simple slide to explain it. So here we're looking at the total damages and economic losses caused by natural disasters in 2020. On the left, you see that that was $190 billion. Of those $119 billion on the right side, you see that $81 billion were insured. And in the middle, you see that that leaves us with an incredible gap of $109 billion of uninsured losses. And this is really not just a simple insurance statistic, because what this means in practice is concretely governments that may need to redirect funds that were planned to build new hospitals or improve education. They need to redirect it for reconstruction after a disaster. Small and also large businesses that can wait for a year and more until they receive the funding to get back on their feet, and often many going under in the process. And most importantly, people that will be waiting longer for the funds that will give them access to clean water, to food, and actually to very basic services like health services and transportation. And that means that the impact of a disaster then is bigger than what happens on day one, because it gets amplified over time, causing people to get sick and often also deaths. So this protection gap is really a big challenge. And let me tell you then a little bit about what we're doing about it, because even though there's tremendous need for insurance protection, providing it in developing countries is not quite simple. So next, please. The climate change is bringing on new risks, and it's really important that we work quickly to understand and to quantify them, to enable countries to prioritize where will they direct climate finance, to adapt and to reduce risk where it can deliver the greater resilience. Next, please. So in this area, one of the things we're doing is we're investing to develop something called the Ocean Risk Index. And this index will basically show us and inform, and it will be open for use for everyone. What are the risks that will affect coastal communities from all sorts of different angles: physical, social, economics? Where are the vulnerabilities? It will also enable us to deliver insurance and risk financing products that are relevant exactly to this type of risk and vulnerabilities. Second, and next please, we need to deliver new and innovative products that respond to these new risks, and particularly that consider the realities in these countries that are most affected by climate risk. So for example, a product that we have for smallholder farmers that are the most vulnerable in that area in agriculture. And we work with governments to develop products that are subsidized, so it will protect the most vulnerable that would otherwise not be able to afford them. We work with satellite imagery and other different remote sensing technology to access weather and climate data that enable us to develop these products. And we design often products that will trigger payouts sometimes before the full onset of a disaster. In the case of drought, for example, data can show us a lack of precipitation before drought is fully on, and that means that a trigger will be that a payment will be triggered so that farmers can subsist. They can buy fodder for their livestock, food for their families, and that avoids, for example, them migrating to cities. We also look that whenever possible, we use digital payment systems that will deliver the payouts directly and quickly to the beneficiaries, rather than getting lost in different steps in ministries, etc. Next, please. Another barrier, an important barrier to the use of insurance in the Global South is know-how and access to risk analytics tools. So one of the important things we do is capacity development. And as we design these solutions, and this is an example of a project in Peru that I'm personally directing, we're designing it to provide protection for public schools for the case of flood and earthquake. And as we develop the program, we will be providing all the risk data, the risk models to the government on an open source basis. And we will be training them so that they can own and work with these tools also in the future, and they can own the risk information. Now, we don't do all of this on our own. AXA is chair and member of something called the Insurance Development Forum, which is a public-private partnership that brings the insurance industry together with donor governments like Germany, UK, and others, the UN Development Program and other UN agencies, NGOs like the START Network, etc. And together we work to amplify and scale up our reach and the impact in developing nations to help drive greater adaptation and resilience. And that is really key. None of us can solve this together. Collaboration is absolutely key. Thank you. And back to you, Francesca.
Thank you very much, Claudia. Anyone who's got questions for Claudia, just you can put them in the chat and put her name first. But I'd like to kick off by asking you a question about governments and should governments be using insurance to protect their populations? And if so, how would that work? How does the interaction between the governments, the insurance sector, and the communities actually, how does that go about?
Sure. Well, let me start by saying that insurance should be one of the tools that government uses, right? It's not the only one. And usually, particularly for countries in developing nations, they would want to insure the really bigger risks, the events that happen only once every 100 years or so, and not sort of the everyday, because that would probably be too expensive. But it's definitely a tool that would be smart to use and have in their arsenal. How would it work? There are different paths. In the insurance market, they can go to an insurance broker and seek to get the protection. The Insurance Development Forum that I mentioned, we actually work with governments and design products that are really tailored exactly to the challenges and the needs that they have. And the good thing about that, as I mentioned, is that we provide the tools, provide the training, so that can be really, really valuable for these governments. I think one of the things we're hearing, for example, from the group of the 20 vulnerable countries, is that the access to risk information is really a challenge. So certainly going to the Insurance Development Forum is certainly an option. And looking to also develop their own insurance markets, it's really important, right? They will want to have a stable insurance market that contributes to the stability of their economy.
And you mentioned there, insurance should be one of several tools. Can you just give me an example of other tools that would be available to Global South populations, other risk management tools?
Yes, absolutely. So I think it needs to start with having the tools to understand their risk. And once they understand it, they can make the decision. There are certain risks that a government may be able to afford with having an own fund, disaster fund. It's important to also have a disaster response agency, right, that will put these funds, these plans in place. That means that they know that the funding will come and they can react quickly and act quickly when a disaster strikes. In terms of funding, there are catastrophe bonds. There's also contingent loans that organizations like the multilateral organizations like the World Bank and other regional multilateral banks can provide. And so ideally, a country looks at it's looking at this on the overall economic picture, right? Because if countries depend only on humanitarian aid and contingent loans, that affects their rating, their sovereign rating, which means it's increasingly more expensive for them to take on loans. And at the moment, after the effect of the pandemic, developing countries have an extremely high level of debt. So it depends on the situation, but there's a range of tools they can access.
Yeah, brilliant. Thank you so much. It seems to me there's an interesting question here about when countries get access to funds, when in the cycle of an extreme weather event or a water-related risk event, when actually they get access to funds, and funds are available at different times depending on what type they are. Okay, brilliant. I'd like us to move on to our next panelist now, Andy McFarlane. He is Head of Climate at AXA XL. He's responsible for setting the strategy related to climate for AXA XL, and he plays an instrumental role in expanding AXA XL's involvement in closing the protection gap. He also leads the public sector partnership practice group at AXA XL. I'll hand over to you, Andy.
Thanks, Francesca. Good morning, good afternoon, good evening to everybody as well. I join you from Bermuda, where the sun is just rising, an hour ahead of Helen, who's probably still in darkness. So I really wanted to go into in a little bit more detail a bit of the nuts and bolts around insurance. So Claudia's given you a very good overview around the value of insurance that it brings to economies. And I think an interesting way of articulating this in a foresight report that we were involved with earlier in the year, they described insurance as the invisible force in the global economy. And I think that's a really nice way of thinking about it, because if we take a step back, there is a lot of activity that goes on in the global economy that wouldn't be able to if it wasn't for insurance. And so what we're really trying to think about is all those ways in which we can bring insurance to close the protection gap. So I'm going to quickly, as I said, I'm an actuary by training, so I love numbers, I love statistics, get into the sort of the nuts and bolts. I've only got 5 to 10 minutes to talk about it, so we're not going to go into too much detail. But what I'm going to do is I'm going to try and give you a perspective of what's actually needed for us to structure an insurance product. And hopefully in that way, we can then start to think about ways we can show how insurance currently is used in some areas around water scarcity, but we can maybe think about ways in which in the future we can bring insurance to bear on the issue around water security and the impacts that it has. So next slide, please. So, this is a bit of Insurance 101. What do we need in order to have an insurance product? And so these are the sort of the key factors and features that we need in order for us to be able to structure an insurance market. We need a large number of risks, so we need to be able to pool risks. Claudia mentioned Haiti. In the Caribbean, there's a pooling mechanism between Caribbean islands that provides insurance. The islands come together, they purchase insurance, and with the understanding and the thinking that each island is unlikely to sustain an event at the same time or of the same magnitude, and so we're able to pool these risks together. We need a definite and we need an accidental loss. So we need to know that something's going to happen in the future, which we're not going to know when's going to happen, and not necessarily the size of the size of the loss to the policyholder. It needs to be outside of the loss needs to be outside of the control of the policyholder. But the size of the loss also has to be meaningful. So there's no point in us necessarily providing an insurance policy for a few $100s, as Claudia mentioned. Governments might be looking for large insurance policies to cover extreme events. The smaller events, the cost of those might be unsustainable. We also need the premiums to be affordable, though. So we have to find that right balance between finding the size of the loss, which is big enough, but calculating a premium which is affordable enough for governments, ourselves as policyholders, our home and car insurance. They need to be affordable for us in order to be able to take advantage of that force that insurance brings. We need to be able to calculate it. So, we need to be able to estimate the probability of a loss and the size. If we have a loss, putting those together allows us to be able to calculate the premium. And an important event, important thing, similar to the number of risks, having a large pool of risks, is that insured events need to be independent. Right. So when we have a sequence of events, we typically want them to be at a scale and a size so that we don't bankrupt an insurer, we don't bankrupt ourselves as AXA XL. So we're able to also do that by managing our exposures and the amount of risk that we put in each of these areas. But really, we want these events to be independent and not in any way sort of related. So that gives us a bit of these key features that we need. So as we sort of think about water scarcity, water security, Francesca mentioned about infrastructure that's needed to keep that access to water and that water security. So, how would we be able to think about bringing insurance to bear on those type of issues around water security, knowing that we need these features in place in order to have an insurance market? Next slide, please. So, knowing that these are the features we have when we think about physical risk and we think about something like drought or floods or contamination, ways we need to put all that information, and this sort of relates back to the calculable part of the previous slide. We think of risk as a function of three key components: hazard, exposure, and vulnerability. Hazard would be the event that has the potential to cause a loss. So if we think about water, it could be drought or it could be flood. Exposure is the asset that's at risk. So, if it's a farmer, it's the size of their crop, the land that's at risk that needs to be covered. And then the vulnerability is the ability of that particular asset to withstand the hazard. So it's the function, it's the intersection of those three key components which allow us to calculate the risk. And in order for us to be able to understand that, we need to understand each of those components. So, it's what the event that we're exposed to, how much of the asset that is exposed, and how does that asset react when we have that hazard. And an important thing to remember here, and natural catastrophes, events that we read in the press, oftentimes there's a confusion between the use of the word risk and hazard. So as an insurance, coming from the insurance perspective, a risk is an intersection of all those three key components. Talking specifically about a particular event in insurance, that we would think about the hazard. And we need to be aware from an insurance perspective that hazard is only the one component of the risk equation. Next slide, please. So one aspect of insurance, as a number of people in developed economies will have high insurance penetration. There will be high insurance penetration. We typically all have home insurance or vehicle insurance, and that type of insurance that we buy is indemnity insurance. So I'm going to talk a little bit about the difference between indemnity and parametric, because there is a use for parametric that we can begin to think about in the context of water security. So just quickly, indemnity insurance, it's the name sort of gives it away. The aim of indemnity insurance is to indemnify yourself after you've sustained a loss. So as I said there, the event happens, you submit a claim, somebody comes around to assess the claim is approved or denied, paid by an insurer, and you get the replacement cost of an insured value. One aspect around indemnity insurance that it is worth highlighting. In a lot of the times we see insurance claims run very smoothly, but sometimes insurance companies get it wrong, right? There is the risk of assessing the claim, assessing the damage, and the payout not necessarily being commensurate with the loss. So that sort of covers off indemnity. We're going to look at then parametric. Parametric is a new form of insurance. It's been around, I say a new form, but it's been around a while. It's been in many different guises. Claudia mentioned it a couple of times in the guise of cat bond. Cat bonds are typically parametric type products. Index insurance, which Helen's going to go into a little bit more detail, that has been around a while. But as we get more and more access to better data, more detailed data, we're finding that there is a growing appetite for parametric insurance to cover some of these issues that we face with the protection gap that Claudia mentioned. So the thinking behind parametric insurance is that you really try and design an index which replicates the loss that you would be exposed to if you had an indemnity type policy. So if we think about a farmer, if we think about drought, instead of if there is a drought, you go around and you assess the claims and you pay out a loss based on the volume of crops that a farmer has lost, you sort of work out, or you think, all right, I'm going to look at rainfall level as a measure for the potential for that farmer to have a loss in the event of a drought. So you might structure the index, you might do your research, and you sort of say, all right, rainfall below a certain level in a particular area means that that farmer is more likely to sustain a drought at that point in time. And we will structure a product such that if the rainfall is below that level, the farmer gets a payout. And the beauty of parametric products is that that data that you have is publicly available largely. There's a lot of it. You can structure the index reasonably easily, and there's no need for the intervention from the insurance company to come around and value or assess the loss. If that index is breached, a claim is paid. But as with indemnity, there are some risks and downsides with parametric, and that's around what we call basis risk. And that's really the difference between when the index gets triggered and whether the insured sustains a loss. So we can get instances where the index may be triggered, but the insured may not sustain a loss. So that's positive basis risk. But we may also get instances where the farmer is exposed to drought, his crop has failed, but the index hasn't been triggered, and so he doesn't get a claim. So that basis risk, as I said, as we get more access to more and more data and more information becomes available to us, we can sort of look to close and reduce that basis risk. But there is, as with indemnity and parametric, there are positives and negatives to both. Francesca, I think that's sort of me. I think we're sort of looking to lead into Helen going into a little bit more detail on what we're working on around index insurance.
Yeah, perfect. Thank you very much, Andy. I do want to ask you, I know Helen's going to talk more about parametric products, but is it a case it's either or? So you can either have indemnity insurance or parametric products. Can individuals, could they get access to both?
You know, as I mentioned, there's a sort of a growing wave around the use of parametric and almost a thinking that parametric is going to solve all our problems. I think as we get more and more information and data becomes, as I said, becomes more available, I think we will see a growing interest in parametric, but I don't think it's either or. I don't ever think parametric insurance is ever going to replace indemnity insurance. But I think parametric, there's a definite need for parametric, particularly in areas where insurance markets are not as developed. The ability to scale parametric insurance is an issue that is slowly being addressed, but that's the beauty of parametric, right? To be able to design a product and then scale it quickly without an infrastructure that you might have in areas of where indemnity insurance is so prevalent, as in the US or in Europe, where brokers, brokers are typically used for a lot of these products. So it's going to be, in my mind, these are two tools that insurers have, and it'll be where this tool is best suited for a particular problem. Or in some instances, it could be a combination of both. Claudia mentioned the quicker you get money after an event, the quicker the recovery. And so it could be that in parametric, there's an initial payout post an event, immediate funds to start that process of recovery. And after that, maybe indemnity kicks in, to sort of provide more additional or additional sort of coverage. So I think it's going to be a combination of both.
Fantastic. Okay, thank you so much, Andy. I'd now like to hand over to our last panelist, Dr. Helen Greatrex. She is Assistant Professor in Remote Sensing and Geospatial Analysis at Penn State University. She's based across Geography and Statistics departments. Helen's research is absolutely fascinating. It focuses on the complexity of weather risk management, She moves from hazard through exposure and vulnerability to impact. She's worked extensively on the overlap between the weather and topics such as disease, humanitarian support, and insurance. And Helen's relationship to AXA XL, she's actually PI for an AXA XL funded project that looks at livelihoods and insurance design in Somalia. And she's going to talk to you a little bit about her research on Somalia today. So over to you, Helen.
Hi, and good morning, everyone, or good afternoon or good evening for everybody else in a different part of the world. It is very early here, but I'm excited to talk with you all. So yeah, thank you for the introduction, and also to Andy and Claudia for kind of giving me everything I needed to chat about my work. So I'm, as Francesca said, I'm here at Penn State, but I've worked on index insurance and parametric products now for around a decade. And I know from experience that talking about insurance, it can often feel academic or not relevant to topics like WASH, not relevant to water security. I see that there are quite a few people from industry in the room. It can be hard to work out how insurance works in your setting. Equally, I know that many of you might have heard of or might have had very bad experiences with the insurance industry. It's not always positive. But parametrics or index insurance, it's currently working at scale across the global south in a huge variety of different contexts, from individual farmers covered, from social safety net programs to government programs to industry-led programs. And so my job is to take us back to water security and to WASH and the global south. How does everything we've spoken about so far fit in with WASH? How does it fit in with water security? And I specifically want to focus on one of the most complex places in the world to think about water security, which is Somalia. So if you go to the next slide, please, because I think there are also climate finance people in the room, and I know that there were sessions earlier this week on climate finance and in the water security world. Especially if you guys who are in NGOs, you might have heard terms like forecast-based financing or early warning, early action. Index insurance is new on now, indemnity insurance. So I just want to talk about how all of these things fit together, because I first want to stress something that it's not always obvious, and it kind of builds on what Claudia and Andy were saying. Climate finance, weather insurance, forecast-based financing, these are basically all the same thing, like mathematically, they're all the same thing. They're just happening at different timescales, and they're happening based on different data. So let's take climate finance, which is vastly complex, but one type of climate finance that's being increasingly used is around adaptation, where we might look at a climate forecast for an area, look at the complexity of that area and assess possible future hazards, how they might change. Look at what options are available to mitigate those, the social outcomes of those hazards. We don't care if it rains less if we can cope. So we're looking at bad years, bad social outcomes. And then the climate finance's money is released to support that action, to support those things. And that often goes alongside long-term programming for water security in many places in the world. Then moving down the chain, closer to a weather event happening or closer to the present day, we have early warning, early action, or forecast-based finance. This is doing the same thing, but it's based on a weather forecast. So we see what the seasonal forecast is saying, or we see what the hurricane forecast is saying 3 days out, but we're using a forecast of the weather, the forecast of severe weather, to assess what option, we see what those things are saying, see what that means in terms of a weather hazard for an area, assess what bad social outcomes or what opportunities might be unlocked if that weather hazard happens. And then in forecast-based financing, if that we look for a specific trigger, if that weather forecast triggers, money is automatically released to support that action. So same thing, but you're basing it on a weather forecast. Parametric or index insurance is the next step down that chain. This is after the weather has happened. So we're observing the weather now. So we're more certain that the weather hazard has happened, but before, hopefully, the social impact has occurred. So before, especially with things like drought with longer timescales. And so this is the same thing. We are taking a weather hazard. We then look to see how does that link to bad social outcome. We then see if that weather hazard happens, we can trigger payment, which could then lead to some sort of reaction. And then finally, indemnity insurance and disaster response happen after the fact. That's literally, you can observe the damage, you can observe what's happened. So I just want to give you a sense that this isn't one thing or the other. And this doesn't have to be one is for farmers or one is for governments, or it doesn't have to be any of these things. These are just a continuum of options where you're looking at how to release funding linked to a weather forecast or a weather observation. So ideally, if you're thinking about water security, especially in complex places, you might want a combination of these. Climate finance funding long-term adaptation for, say, drought protection, and that those adaptation options might be protected within an individual severe season, first by early warning, early action, which maybe triggers extra monitoring. And also that early warning, early action might trigger a more formal index insurance payout if that weather gets worse or if that weather actually occurs. That index insurance money can pay for quick responses. And then the damages left over are then covered by things like indemnity insurance. So you can see that some of these things might happen at different scales and at different things and at different levels for different customers. But in every case, we have common themes. You have some sort of weather and climate hazard. You're linking that to some sort of context-specific bad year, whether that's for your industry, whether that's for water security. You've linked it to a specific action you can take. And this happens for our own insurance. Like the action is I can drive my kids to school for car insurance. And then the finance should be automatically released to make it happen. So when parametric insurance works best is when this chain is really strong. You are confident on observing the weather hazard. You know that there's this clear, super transparent relationship between that hazard and the impact for that context. I think the screen has stopped sharing, so I will carry on chatting though, because it was the same slide. So there's a super transparent relationship between the hazard and the impact, and there's a clear link to actions you can take. There's a reason why paying a premium is worth it. Where insurance or climate finance goes wrong is where one chain of that link is missing. Insurance especially doesn't work when there's a lack of communication, when you don't have the right product for the customer's need. And in water security, this is complicated. How do you link low rainfall in July with water insecurity or with contaminated water? It's a complicated link. And that's where my project comes in, and that's where my work with AXA XL comes in, because people like Claudia, Andy, global insurers, anyone you work with in the insurance side, they can't know all of that context every time. They can't go to every country. And sort of be there. And so you need local partners, you need a clear understanding of that relationship. And my job is to statistically work out, well, how would that happen? So if we go to the next slide, because I want to explore that complexity now for Somalia, which is the work I'm currently doing with leading with AXA. As many of you know, Somalia, country in East Africa, it's susceptible to many weather shocks. There are droughts, there are floods that have massive social impact that have previously led to famine. And although Somalia continues to show hope in rebuilding its political capacity and national stability, there's frequent conflict there. And as many of you know, its humanitarian caseload remains both unsustainable and also very unstable. Somalia is also hyper-arid. When there's not enough rainfall, there is not enough water. And so, as I'm sure many of you are aware, the water security and wash landscape is hyper-complex. And you can see that in these slides. You can see these are slides from UN OCHA and from other water security operations. You can see the amount of people working on WASH this year, how complex that landscape is, how that links with markets, also how that links with the weather, and also how that links with conflict. equally, Somalia is huge. The map on the right is Somalia overlaid with Europe. There's you can see it's much bigger than people imagine it to be. There's a huge amount of diversity from the less arid south to the arid center, and then there's mountain ranges in the north. So the same weather hazard isn't going to affect everyone equally. There is no one insurance project that's going to work in this case. And so this is where we wanted to focus. We wanted to go beyond just using, say, July rainfall as a measure for index insurance to understand, well, what are the nuances and how could we act in this landscape? So the project that we're doing is, if you go to the next slide, please, is then looking, is to help provide that landscape to the insurers. We're looking at talking with people and narrative interviews. So our work is focused specifically on humanitarian response and insurance potentially for NGOs themselves, rather than for the individual farmers, maybe insuring their portfolios. So we have 25, 26 formal narrative interviews with humanitarian and weather experts, plus literature and news searches, things like that, to try and understand the story of a bad year for different communities, for different livelihoods at different spatial scales. So for example, we've learned that Somali districts are huge. One Somali district is almost bigger than the Netherlands. We have to go inside that spatial scale to be able to understand the nuance. I'm then illustrating those stories with satellite weather analysis. So I'm not making an insurance product yet. I'm just seeing if I can find those stories in the weather products. And then together we've been building these causal chains of disaster events illustrated using these satellite data. And then finally, what we can then do is we can then go to the humanitarian sector for their early warning, early action. We could go to the insurers for index design to say, well, these aspects of the weather look like they're important. These might be the right spatial scales, and these might be the right types of customer to think about these programs. Or in Somalia, maybe this is a place where insurance is not yet the right tool because the hazard happens too often. So this is where we're sitting. Here's an introduction to some of that complexity. If people are interested in hearing more about this particular project, I will put a web link in the chat on Pathable. But thank you for your time, and I'll hand you back to Francesca.
Thank you very much, Helen. So a question that comes to mind straight away is, can you apply your work to countries outside Somalia? And if so, how would you go about that? How can it be applicable to multiple countries in the global south?
Yeah, I really hope it does apply beyond Somalia. So insurance, as I mentioned, is going out to millions of people in different contexts and different spaces. What we want to do is to try and make sort of standards for good guidance, for best practice about what do you do if someone comes to you in a new country, in a new context, and says, we have this problem in words, how can you then go to an insurance design? And so although the specific aspects of the weather will be completely hyper-specific to Somalia, hopefully those methods will be useful for other insurers or for NGOs thinking in this space, or for academics thinking about how they might engage with the insurance industry. So I think the methods and the programs might scale, the methods might scale themselves, and we're trying to write guidance on how to do this. But the results themselves will definitely be specific to Somalia because we're trying to capture that context.
Brilliant. I've got a question either for you or it could be for Claudia. If we take it down to a really micro scale, you've got a rural farmer somewhere in a low-income country. Is one of the challenges with getting them access to insurance just actually an issue of lack of awareness? You know, they don't understand what products are available. They're not even aware of the products available. Maybe Claudia can answer that. Is that a challenge? And if so, how do you think we can overcome it? And what kind of stakeholders do you need to overcome it? Is it NGOs? Is it governments? How can we make people more aware of the options that are available for them for risk management?
Yeah, happy to start, Francesca. Thank you. Absolutely, lack of awareness is one of the challenges. But if you go at the very micro level, it's also affordability, right? When people are having to choose between food on the table and for the family and fodder for their livestock, or etc., insurance particularly culturally in many of these countries, seems like a very, very low priority. So one of the ways that we address that is by going through governments first, right? By working with governments that will subsidize it. And by starting with pilots and people start to see that actually it works, that people that are covered do receive payouts and recover more quickly, then that starts a positive cycle. But it is very challenging, and also reaching these populations. I mean, in fact, the use of technology and mobile phones today helps very much, both in terms of disseminating information, but also payouts. It's not, you know, it's not possible everywhere. There are, of course, very challenging remote areas. But I think working through governments or working through, sometimes it can be regional cooperatives, etc., is definitely a good way to start in reaching the most vulnerable.
Brilliant. Helen,
Francesca, sorry, I just want to jump in. I think, you know, I think also partnering with NGOs and other aspects of people in the community helps with that communication around the value of insurance, right, and what it can bring. And you know, that involves also the government, and as Claudia said, that the various levels between the farmer on the ground and you know, the government right at the top. So I think it's trying to form those partnerships and making and demonstrating that value, which is one of the big reasons why we did that report last year with Cambridge, really to demonstrate and try and put a figure around what value insurance brings post disaster.
Fantastic.
Yeah.
Helen, did you have anything to add there?
Just a little, just to say that, yeah, I think it's at all of those levels, and it's often just about clear communication and clear expectations in advance. And so the most successful products are often the ones that are like pre-linked to some sort of action. Like, we have car insurance in America, at least, so that you could drive your kids to school and you can go to work without going, knowing that if something happened, that you would be protected. And so there's a reason for you to own a car. And so I think the ones where it works well are, and shout out to the World Food Programs, our for Harita program, for example, are ones where there's these clear levels of communication and that the customer is involved in the design process. The reason why I shouted out R4 is that they actually get farmers involved from some of the remotest areas in the world in actually designing the insurance themselves. And because of that, there's high uptake and they understand when it will pay and when it won't pay. When it goes wrong is when that communication breaks down. So I think it's almost worth turning the question around and being like, if people don't understand the product, they shouldn't be buying the product. And so everybody in the chain has a responsibility to make that happen. So putting a lot of focus on it is really important.
Yeah, agreed. Okay, we're miraculously out of time. It's gone very, very quickly. So we're going to have to wrap up there. Thank you so much to all of our panelists. Thanks to all of our audience for joining. If you do have questions for us, and if you're interested in this work or interested in collaboration between the water and insurance sectors, you can get in touch with me on Pathable or Ellen Shattuck, or I've just put in the chat there an email that you can email if you want to find out more, if you want to get in touch with any of our panelists. Thank you again to everyone for speaking and everyone for joining, and I hope this creates some really interesting future debate. Thanks very much. Bye-bye, everyone.
Thank you.
Thanks, everyone.
Take
Bye.
care. Bye.